Hey guys, you know, one of the most successful traits of an investor is patience. And that's why I haven't published a video in a long time. It was really a test to see if you have what it takes. Okay, yeah, I know you're not buying that. Look, I'm gonna put together another video that's gonna explain some changes on the channel. For now, all you need to know is that these changes should hopefully lead to me publishing on a more regular schedule. So thank you so much for your patience, for the people who have stuck around so long. And let's get back into our series. So this is the Learn About Investing series. This is part number 9. Now in the last video, I said that we're gonna start talking about investment products now, but I'm actually gonna wait at least one video before I do that. I think we need to spend a little bit more time on asset classes, and specifically more asset classes that we haven't talked about before. So we're gonna start there. So thanks again for sticking around. I am gonna start publishing more videos, promise, swear to God.
Swear to me!
I don't know why you would believe me at this point, but let's just go with that. Anyways, let's get back to our learning about investing.
So far, we've only looked at 2 top-level asset classes, equity and fixed income. There is another top-level asset class, but it sometimes gets lumped into the fixed income category, and that third top-level asset class is cash. Now, cash is a catch-all name, and it's used interchangeably with terms like cash-like securities, or cash-like instruments, or money market securities and money market instruments. But forget about that mumbo-jumbo for now and think of it simply as cash, in the sense that it's not going to grow very much. So it really does look and feel like cash and kind of just sits there doing nothing. Now remember, generally speaking, fixed income is going to have a bit of return and a bit of risk, and equity is generally going to be a bit of a roller coaster. As a side note, as we go through this series, there are lots of subtopics that I know some people want to learn more about. So some of those subtopics may be material that won't be of interest to people looking to learn just the very basics. So what I'll do is I'll put out supplementary videos that will be on the channel, but won't be part of the Learn About Investing series playlist. And one of those videos will certainly be a walkthrough of what these various cash-like instruments might be, in case you were curious. Now, one question you might be asking is, why have money sitting around doing nothing? Well, generally speaking, when you invest, you have to give or transfer cash to a financial institution who then puts it into an investment account on your behalf. And once it's in the account, they then turn that cash into investments. We'll get into the nuance a bit more in the video on investment products, but some investments have to be bought in whole units, which means if you had like $1,000 and the investment you're looking at has a price of $300 per share, then you could only buy 3 shares, which is $900, and you'd be left with $100 in cash left over. There are other investment products that allow you to buy fractional units, and if that were the case, you could buy 3 1/3 shares for $1,000. So sometimes there is cash in a portfolio just because there's leftover amounts of cash because certain investments have to be bought in complete units. Now, another reason some people might have an allocation to cash is that they are specifically waiting for an opportunity to buy something. That means they are trying to time their investments, which I should point out is notoriously difficult. But there are a lot of different investment styles out there, and we'll get into those in future videos. Another reason that people will have an allocation to cash is that they are withdrawing money from their account, sometimes on a regular, ongoing basis. So they just have a bunch of cash sitting there waiting to be taken out over a period of time. And finally, they may also have cash sitting in their account to cover any account fees or commissions. For now, let's just park this idea and we'll work with the assumption that the allocation to cash is going to be fairly low for most people, especially at the beginning, between 0 and 5% of their overall account value. So we have 3 main asset classes so far: equity, fixed income, and cash. Now, I'll point out that many beginners will likely only use equity and fixed income when looking at asset allocation to start, but I want to dig a bit deeper because some beginners will start by looking at more asset classes, and it'll certainly come in handy for future videos. So let's go back to our general definition of what an asset class is. It's a group of investments that generally behave in the same manner. They also have other similar characteristics and similar regulations. So we know equities represent ownership of shares of companies and tend to have higher risk and reward characteristics. We also know that fixed income represents debt and tends to have lower risk and reward characteristics. And we have cash, which is basically inert, just sitting there looking back at you, essentially has no risk and no reward. Now, let's turn our attention to real estate. There are various ways to invest in real estate, but at its very basic element, you would be owning a piece of property. So from that perspective, you might think it should fall into the category of equity because of the ownership. But on the other hand, if you rented it out and collected rent every month, you can see it has some elements of fixed income payments. So where should we put this? Well, because the regulations for real estate are different than for stocks or bonds, it can be put into its own asset class. We can also justify that because real estate is different from either stocks or bonds in various other ways. For example, it takes longer to buy and sell physical property, whereas stocks and bonds can be traded in like milliseconds. Generally speaking, real estate will have its own market cycles too that are different from equities or fixed income for the most part. The next major asset class is commodities. A commodity is essentially a raw material or basic agricultural product. Now, you can have soft commodities, which are grown out of the ground like coffee and sugar, and you can have hard commodities, which are mined like gold and copper. And you can also have energy commodities. And again, commodities fall under their own asset class because they exhibit similar characteristics. The commodities themselves are not businesses, but rather they are basic components used by businesses and people around the world. And the last major asset class we'll talk about is alternative investments. This is a pretty catch-all category, and it can include things like hedge funds, which we'll explain in a future video when we start talking about various investment products. It can also include private equity, which basically means investments in shares of companies that are not publicly traded on stock exchanges. And I think it makes sense to have a supplementary video on the difference between publicly traded companies and private companies, so I've added that to my list of topics to cover outside this series. And that distinction between public and private companies is a good to know, but it's not critical at this stage in learning about investing for beginners, so don't worry too much about it yet. Now, I will point out that some people consider real estate and commodities to be under the category of alternative investments. Some people refer to anything beyond the conventional asset classes of equity, fixed income, and cash to be quote-unquote alternative. And I'll tell you that that distinction is not that important. What is important is understanding the risk and return characteristics of every part of your portfolio and how they fit together. So don't get too caught up in those semantics.
Okay, that's it for this video. In the next video, we're going to start to talk about some sub-asset classes, and then we'll take a look at some hypothetical portfolios to see how all these different asset classes might go together. And finally, after that video, then we're finally going to start to talk about investment products. So I know it's a long setup to get to investment products, but we're almost finally there. In the meantime, don't forget to hit the like button. If you haven't subscribed yet, get on that. And also you have to, if you want, turn on the notifications, hit the little bell so they get notified anytime a new video is posted. Who knows, maybe the next one will be while you're still in your 20s. All right, that's it for this video. We will see you in the next video.